Hey, what you gon' do? I'm handling my business. Handling my business. Handling my business. Yeah. Me, I'm just handling my business. Got loot in my vision. Keeping hoes in good fitness. Cannot get a witness. Push a man, praying alcohol in my sleep. Bagged up cash, shorty clock the door every week. Alright, Trans Am got the rubber band in my sock. Raw Van Dam, watch me God sham with the rock. New wood grain thing, yeah, I'm copping.
I'd like to welcome you to the World's Motherfucking Greatest Podcast. I don't know why I went ASMR, but I just did. I'd like to welcome y'all to the motherfucking World's Greatest Podcast in the world. I had to do it twice just because I felt like it. And today's guest is a guest you've seen before, and you know,
shit, because we can.
yeah, I can do whatever I want here.
Exactly.
And so you see her, so you know what this means. This means we're getting your finances right.
It's tax season, baby.
And you know who we call. We got life insurance out the way first time. Now it's time to get your taxes right.
Okay.
So,
Get your deductibles right.
you already know her life story. You already know she's good for it. You know she's legit. I heard it for you. Y'all even may have contacted her. Good for you.
Congratulations.
I'm happy for you. But if you didn't, remember, you can still do that. But today is a different season. It's tax season. Them W-2s, them 1099s, all of that. There's probably way more that I don't know, but she has all the information. So, Dree,
Hey, what's going on?
before we start overall, what are taxes in a very, talk to me like I'm a 5-year-old.
Yeah, so the government has a lot of programs, and in order to fund them, I mean, not even programs like infrastructure, etc., they need our money to pay for it, and so that's why they pull money out of our paychecks in order to pay for them. Paychecks and a lot of money we make outside of that, so passive income, etc. So think about, you get Social Security taken out of your check. That's going towards a Social Security fund so that when you're in your 60s, you can pull from that. Social Security has other purposes, but just general.
They say we're not going to have that.
And they say that we're not going to have it, so that's the whole gripe within millennials. Like, are we paying into something that we won't even have access to? So stay tuned.
It's crazy.
Yeah, because
That's actually hilarious.
back in the day, they used to have pensions and defined benefit plans. So companies essentially paid for your retirement. So you may know, like, grandparents living off of a pension, and Social Security is the government funding a pension. Now, companies used to fund it. They have 401ks now, which are defined contributions. So we know.
Get rid of unions, ladies and gentlemen.
So companies basically getting rid of the, hey, we're going to pay you a certain amount of money in retirement. They say, we're going to just give you some money up front, and it's on you to try to save and plan for retirement. And so what we're finding is a retirement crisis where a lot of people are not saving enough. We don't know how much we need to have saved for retirement. General rule of thumb is however much you have in your investment or your 401k, you can live off of like 4% of that per year, and then the rest of it's supposed to be growing in the market. So you want to have at least like $1 million or more in your 401k to be able to live off of. So that's one example.
And how common is that?
For people?
$1 million in your 401k.
I would say it's probably not that common just for general America. I don't know the exact stats, but I can get back to you guys on that. But can we take a shot, though? Because before we get into things, for real, a little history lesson about...
That was a little history lesson. Listen, we're going to learn about some taxes today, buddies.
Yes.
Termana.
Terramana. Shout out, Black owned. Went to a birthday party and everybody brought a bottle of Terramana. It was kind of trippy. I was like, it's the new Casamigos, you know.
I don't know about that.
Okay, it was a quick reach, but other things taxes pay for, like state, local government taxes, education. So people are able to send their kids to public schools and not have to pay out of pocket because the taxpayers pay for it. Property taxes is another example. You pay property taxes. So property taxes, income taxes, we pay sales taxes. So some states don't have income taxes like Texas and Florida. And so as a result, their property taxes are normally more expensive because they don't have the benefit of getting it from the income tax.
I know places like Delaware don't have sales tax. So
Exactly.
where do they get it from?
Probably in contact. And Delaware is a state where a lot of people like to start their business because they are really business friendly. So I'm actually curious if they get a lot of money from that, like people setting up their businesses and then that offsets it. But
I know Rhode Island does that.
they do? Okay. I didn't know that off the top of my head. But
I don't know.
why do you know? What do you know about Rhode Island?
I don't know entrepreneurship.
Okay.
I had to write a report on one of the companies, and they started their LLC out of Rhode Island, even though they were based out of Seattle, Washington.
Yeah. And then like California is hidden. I was just talking with someone about this. Their fees are about, like, if you have a LLC or a business or something like that, it's $800 a year to pay the annual fee. So it's pretty pricey. And imagine you have this huge business and you have all these various entities under it. So
Subsidiaries and whatnot.
exactly. So then it's like you end up paying, if you have 15, you will have to pay that times $800. So it gets up there. Yeah. Fun facts. But
That's why a lot of people have houses in Las Vegas that live in California because the taxes offset.
okay. Yeah.
So, what is your role in tax season? How do you play a part for helping us get our taxes done?
Yeah. So I used to work in the tax space, so have the knowledge there, so I could talk very high level and detailed about what the tax return looks like, the different schedules, forms, because that's what I used to do. Now, prayerfully, I am out of that space and I don't have to deal with tax season. It was just such a grind where you're working nonstop from January through April and then again from August through October. And everyone's trying to do things last minute. Of course, a lot of people get their W-2s and stuff. And if you have a pretty simple situation, you get your W-2, you file it, get your money back, or you pay the government. But then when there are more forms involved, that's when it gets a little bit more complex.
And what are these forms?
Whew, there are so many different forms. And I could just talk about
Let's start basic. Start us with the most basic of tax forms and like tax return.
Okay. 1040 easy. It's like, hey, it's the form 1040. I can really get into the weeds about it, but the form 1040 is just your standard individual income tax return. That's the one that everyone is supposed to file if you have some sort of income over a certain threshold. Now, if your situation is not complex and you make a certain amount, you can do the easy, and it's just a smaller form. But the 1040 has this whole form, and you've probably seen it. It's the first page, and it has all your income, like W-2 and schedules, and then it has all these schedules that go under it. So you have like a Schedule 1 that's underlying, and they recently did an overhaul of it, so it actually does look a little bit different. And then you have your Schedule A, which is your itemized deductions, and so that's pretty common for people who own a home, when you're talking about deducting your mortgage interest and your property taxes, and you're able to deduct your income tax, state income taxes that you pay to your state. So if you're in a high state area like California or New York, you typically pay a lot in state taxes and you can deduct it. However, with the recent tax act, that the Tax Cuts and Jobs Act, whichever one happened back then, they changed it so that you could only deduct $10,000. So people in the high tax areas were quite pissed about it. So other things that go on there are charitable contributions. So if you tie to your church, you can deduct that on there, and it has to add up to more than what your standard deduction is. And I don't know the standard deduction off the top of my head because I haven't been crunching tax returns, but generally, I think they doubled it recently. So it's like, it used to be a standard deduction and then an exemption, but now it's about $12,000 or more, somewhere like that. But
That's how much I gotta get to the church.
Yeah, plus your property taxes, plus your interest that you pay.
Anyway, Charles.
So I'm supposed to give that.
You're supposed to get 10.
I just want to know how much I'm supposed to get to the church before I can get a deduction. That's really what I'm trying to figure out.
Yeah, so when you look at the Schedule A and add up all that stuff, like the state income taxes that you paid and your real estate taxes you paid and your mortgage interest that you get from your 1098, then that's when you say, like, if it's below the standard deduction, you're like, all right, I should maybe donate another $1,000 to make me be able to take advantage of the Schedule A.
Gotcha. See, this is the type of information they don't tell you about this. All right.
Yeah.
Yeah, give a church a little bit. That's kind of nasty how the church is getting away with that.
Yeah.
I'll talk about that another day.
Yeah, or 501c3 or Goodwill. You could give donate stuff to Goodwill. So that's the Schedule A. And then you have a Schedule B, which is your interest and dividend income.
Okay.
And so if you have a high yield savings account, you might get an interest statement from that, the 1099 interest. And what that does is just say like, hey, I have my money sitting in this bank account and I made money on it. Now I have to report it to the IRS. Same thing for dividends. Like if you had money invested in the stock market, you probably had some dividends and then you have to put that on there and report it. As I'm going through the schedules, I'm like, the Schedule C, this is for our entrepreneurs, our business owners. This schedule is where you're reporting.
LLC, entrepreneurship, Twitter, I'll pay attention.
Yeah, this is where you put all your income and expenses from your business. And typically, if you're a sole proprietor, which means that you're the only person who owns the business, then you could report on your individual return.
I hope they don't got an LLC and don't know what sole proprietor is.
Listen, I don't know. I don't make assumptions, but that's a good point. So Schedule C is where you're doing that. All right, Schedule D, that's going to be the one where you're looking at your capital gain. So this is really big for stocks and stuff like that. So if you do Robinhood trading, you might have gotten your 1099. And if you sold stock during the year, they're going to have a schedule and you have to put it on there and add up how much money you made or lost. And then you have a Schedule E, which is real estate. So for all my real estate investors who may be renting out a home or Airbnb, this is where you put your income and expenses from that. So a lot of schedules, they all go on your 1040. And then there's a whole bunch of other stuff. But I mean, we can keep talking. Like there's so many schedules on the tax return. I don't want to bore people.
No, so I just want to know, like, yeah, because I think there's general tax information and there's what you're doing now, which is going a little bit further in depth. So is it just that one form? So like, I know you said like over a certain amount. Is it like threshold? Like, do you know the threshold? Like, not off the top, but like, can you kind of like give us a ball range of what it was?
For
when you were working.
How much you have to make for the basic 10 for?
Oh, the standard deduction, I think it was like 14. I mean, we have phones though, right? Can I grab it on my phone or something?
Yeah, for sure. I'm just curious because like
Wherever I
just
put it.
for people who are just like, so like as a person who's filed taxes, do you suggest that people go actually find someone to do the taxes for them, or is it going through TurboTax and all that just fine and dandy?
Yeah, so if your tax situation is pretty simple, like just W-2, you could probably use TurboTax. It's when you're a business owner that it gets more complex and you need someone to look and see what deduction you can take on the Schedule C, like a home office deduction or unique deductions. For me, I'm a business owner, so the deductions I'm able to take are a little bit more complicated than the regular one. So it's like I can deduct business meals and advertising expenses, for example, in travel, right? So if I do business travel, I could deduct the cost of the hotel or the Ubers that I'm taking there as long as I'm doing it for a business trip. Exactly. Oh, wait.
Is there, as someone who's prepared taxes and things of that nature.
So the standard deduction in 2021 was $12,550.
And when we say that, what does that exactly mean when you say the standard deduction?
So when you get your W-2, so we'll use this is pretty ballpark for most people. Like you get a W-2 and say it's for $100,000. Then that ends up being your line one income. And then if you don't have anything else going on your tax return, like no interest, dividends, capital gains, real estate, business, that's going to be your adjusted gross income. So from there, they take that $100,000 and then they say, well, we'll give you a little discount and give you a deduction on that income for what you're reporting to the IRS. So that's going to be the standard deduction. So if you're single, it's $12,550. And so basically, we'll just do 100,000 minus the 12,550. So then you don't actually pay taxes on 100,000 of your income. It's only
88.
Yeah, exactly.
Whatever.
Exactly.
87,500.
Yeah, and then there are other deductions, and they typically goes into like what's your taxable income, and from your taxable income, that's how you figure out your tax. So.
Gotcha.
Yeah, so, and even for your W-2 income, if you're contributing to your 401k pre-tax and you have that deduction, say you're making $100,000 and then take out 6%. So you're really doing what, 94,000? So your 94,000 is what shows up on your tax return. And then you do 94,000 minus 12,000. So your tax liability is even less. And that's the number that they're using when they're doing like stimulus checks. So some people might say like, oh, my salary is $100,000 and I got a stimulus check. Why is that? It's like, did you pay into your pre-tax 401k? They're using the standard deduction. So that's all that's going into it to figure out your stimulus checks, et cetera, et cetera. So
some of these people could have gotten stimulus checks but didn't.
Yeah. Important for this year, they have charitable contributions on the Form 1040. So we said the W-2, then you have the standard. So that's your adjusted gross income, the standard deduction, which is the $12,550. Now, for the charitable contributions, they were letting people do it on the first page of the tax return when normally you had to do it on the Schedule A. So you could do up to $300, and so you could reduce your tax liability another $300, dollar for dollar, on the first page. And then that's when you get to, so they do charitable contributions and then qualified business income deduction. So that's for business owners. It's like 20% of your business income you get to deduct from your income. So very favorable that Republicans did for the tax code. So to encourage people to have businesses.
Yeah, I'm talking about crime for black people. Supreme Court. Y'all crazy.
And then that's when you get your taxable income. And then your tax is based off of that. And then you see child tax credits, et cetera, and self-employment taxes.
How much that child tax credit? I know niggas be trying to eat that up.
Yeah. So since I don't have children, I'm not too well versed in it, but I know they were like giving people advance payments of what they normally get. And so you have to basically report it and say, hey, I got child tax credits throughout the year in advance, so I can't get the same amount I've been getting on my tax return. And then that's when you get to your tax amount. And typically, people already have taxes taken out of their W-2. So say you had the amount of taxes. Say you owe like $5,000 in taxes. If you got $5,500 taken out on your W-2, that's how you get a $500 refund because you've already paid the taxes that you owe based on the calculation, and then they give you your money back. And in the reverse, if you paid $5,000 but you owe $7,000, that's how you owe the IRS $2,000. Okay. So that's how it works.
Whew, that's a doozy.
Yeah. Well, who do you use for your taxes?
I go to a person. A person. There's just a lot going on, but it's chill.
It's a lot going on. I like that.
What do you mean like that? It's a lot going on.
So I can go on TurboTax, whatever, all that shit.
Is that what you normally do?
Yeah.
Okay.
Well, like last year, I think stamp.
Okay. Yeah, when I worked for the accounting firm, I used to do it myself on our software. We were able to use our work software for it. So now I have to figure out, but I can do my own taxes essentially because I have the knowledge. So it's just a matter of figuring out a platform so that I can e-file it instead of having to mail it in, because mailing it in is such a clusterfuck for the IRS. They're backlogged. They're like, just e-file your stuff and then we can give you a direct deposit.
So let's talk about that. What is that process?
Also undervalued. We stopped getting money for like the last 5 years.
Who?
IRS.
They're underfunded.
Yeah.
Is
they have less employees. Like one of the most. They cut them and like a couple other government organizations. Like they cut a lot of their people due to funding and stuff like that, which is crazy because they're the IRS. Yeah, but continue.
Now, I was just going to ask you as far as filing, because you said the thing about doing it electronically, not. What are the different, or how many methods are there, and why do you say don't go?
Well, you can mail your tax return in. Not everyone has access to the e-file system or the internet, but it's paper mail, so you're sending it to the IRS PO box or wherever their mailing center, and then someone actually has to go through and open it versus it going through their online internal system. And so just the fact that they have less manpower when you e-file, I'm sure it probably goes through a computer and then it's doing some audits just off the bat, like checks and balances. And the IRS actually has these tax transcripts. You can go on there, you can go on the IRS website and just put in your information, make an account, and find your tax transcripts. So even if you don't get your W-2 or your 1099 interest, all these companies report it to the IRS. So you can go on there and see all the income that should be reported on your tax return. Yeah.
Nice to know.
You said something about you filing it, you being able to file your tax yourself. What but you
Having a portal to do so.
yeah, is that available to all citizens, or is it just because you work in the finance field?
It was because I was working for that firm.
Gotcha.
Yeah, and I was able to file it using their system.
So let's say I'm a regular civilian. I'm like, I don't want none of you big company people in my business, but I want
An
to,
account.
file my taxes electronically, and I don't want to maybe go through. Is there a way? Is there like an Excel thing? Or I just nah.
Yeah, no, I'm just like, if you don't want to go through like a business, which is like a TurboTax or H&R
Exactly.
H&R Block. Because even people who own accounting firms and do taxes, you have to have more than at least 10 clients in order to be able to e-file. Yeah. Yeah.
So 10 is the minimum. Mm-hmm. Gotcha. And that's federally, don't matter what state, just you got to have 10 clients.
That's a good question. I don't know. I just know that general rule of thumb, and it's like I'm in these CPA Facebook groups and they talk about it like, hey, we got to have at least 10 clients in order to e-file or have that capability through the IRS. And then the state level is a whole other animal because the state's normally taking your federal taxable income and then doing their own adjustments on that. So
Taxes can get complicated for a litany of reasons. People move from place to place. People get different jobs.
People work out of state but live in a different state.
For you, how do you sort of rectify that or try to help people navigate that?
Well, I guess I need a more concrete example.
So I moved from New York
Okay.
to Maryland in
Yeah.
the middle of last year. So
Bought a home as well.
So how would like my taxes work as far as like filing like in New York, in Maryland, things of that nature? And like when people come to you, is that something you're like, all right, this is the game plan, or like do they have to kind of work you through it? How does that work from the CPA to the client?
Yeah, so generally what we would do is, and this is not official tax advice, I guess I have to put that disclaimer out there, but
It's not official tax advice.
generally what we would do is say, what's the timeline? And I can use myself as an example, right? Because I moved from Georgia to Maryland this year. However, my W-2 is Georgia because I'm still contracted out of Georgia until, I switched my contract over on January 1st. So the whole 2021, I had my W-2. So I'm a statutory employee, so that has other logistics to it where I don't get a salary or anything like that, but I do have Medicare and Social Security taxes paid on my behalf. So I am an entrepreneur, but that's why I have a W-2, just a disclaimer. So anyway, basically, you would have to say, when did you make your move, and then allocate the taxes that way. So for me, I have to establish when my residency was Maryland when I'm doing my taxes. So it doesn't matter on the federal level, but it's more so on the state level, because Georgia's going to say, well, you have your W-2 here, you've worked here, we want our money. And then Maryland's like, well, she established residency here, we need to have our money. And so basically, exactly. So for me, it's like, all right, so when did I sell my place in Atlanta? And that's going to be my hard line of, okay, September is when I officially became a Maryland resident. And so from there, all the money that I made at the beginning of the year before September is going to be allocated to Georgia. And then the money that I made when I moved to Maryland is going to be my Maryland income. And so same thing for any investments I have. Like if any transactions happen at the end of the year, it's going to be considered Maryland income because I was living in Maryland. So thinking about like if you sold stocks or something like that. just a general. So I think those are the main things.
What about like life? Because we talked about the children, the tax. You say you don't really delve too much because you don't have kids. But like, what are other, like we talked about buying a house, but like getting married. Are there other like life things that one should maybe think of or can be part of maybe their tax situation?
I like that you brought up marriage because a
Yes.
fun fact is if you get married anytime during the year, then you have to file as married filing jointly. So if you get married December 31st, at the end of the year, the whole tax year, you'll be considered married. And so then have to,
What?
yeah,
That's alright.
yeah.
That's alright.
And normally the taxes are more advantageous when you are married filing jointly because the deductions are basically doubled and it's a whole bunch of stuff that goes into it. So definitely advantageous on that front. Sometimes people keep their finances separate from their spouse and they'll do married filing separately. I've run some what is it called? I've run some, like, not illustrations, but scenarios where a couple was doing married filing jointly, and then they were like, well, maybe we should do married filing separately for student loans, and the tax differential was like $10,000 so they definitely want you to file married filing jointly. Just you get to take advantage of more of the tax advantages. Wow. You get to take advantage. I know. Why am I tongue tied?
So we talk about marriage, children, houses. Is there any other sort of personal things that one can happen in their life and that we don't really think of, but boom, tax deduction? Student loans?
Student loans. We didn't really.
Okay, well, let's talk children.
The child tax credit, and then there's a dependent care credit. I don't even know if that's the same thing, if I'm being quite honest. But people get additional money back, credits, etc., for having children. And then when you have your tax return, if you're able to claim dependents, you get more money on your tax return as well. So that's a benefit. That's why people are like, oh, what's your kid's social security number? I'm going to claim them on my taxes, because generally you get more deductions, etc., to your taxes for that reason. What's another thing? I don't really know too much about the kids, guys, to be honest.
I'm just curious because we're just kind of, doing scenarios. What happens when, like, maybe the kid is up for grabs? When I mean the kid is up for grabs, like, both parents want to claim a kid,
Like,
and
you filed 1 year, I filed the next.
I've seen that.
or stuff like that, or
People
like
would file every other year. Like, I get the kid 1 year, you get it the next.
so there's no way like we can both be like, hey, we want to claim the kid this year. Like, that's
Nah. It's like it has to go on one. Yeah.
You married?
Well, if you're married, then it's gonna be all on your. It's gonna be a joint.
Separated.
Well,
Then you do married filing separately. Then
someone's
one
gonna
has
have to pick.
Yeah.
That's crazy.
That's a wild concept.
Let me
Damn.
see.
How much is the tax
We
kid?
filing together for life.
How much is the kid tax credit?
That's a good question. Listen.
It's $3,000.
My guy on mad.
Give or take.
Okay,
Per
per kid.
I'm glad someone in the room
They were doing
knows.
the tax credit thing. Biden did it, and they were
3K?
giving you the bread.
My dad
Oh,
was 60. She
51.
wrote it up.
No, she said that, and she said now you have to
It's done now. They didn't
report how much they upfronted you during the year.
I mean, I don't think it's more so a report because
That's not
when you
gonna
sign
matter.
up for it,
The
that's
next
basically
president gonna
reporting
change
at
that.
that point. So I don't know if it has to get reported when it's time.
Isn't it just like the unemployment? They said on your taxes you gotta report how much they gave you for it.
But when the first little tidbit came out, it was just like either you want to get it up front or you're just gonna get it tax time.
None taxes.
Like they already know you decided to not get it or you got it. So it's just like, but again, I'll see what happens in a couple months.
Right.
All right.
I guess it'll be too personal to ask you what's your play, because you get like 3,000 a kid, so that ends up being like six.
I'll take the money and you put it in the account. So
Okay.
I would definitely pocket it if I had some kids. Fuck that. Give me that. I need that.
Yeah.
Is there anything else that they?
Student loan deduction, normally you could deduct it if you make under a certain amount. A lot of people don't make under that amount. Well, That's a lie. I would say in my network because I'm from the illustrious Prince George's County, where people are high earners.
I like that.
So a lot of people aren't able to do that student loan deduction. Actually, we could go to the Schedule 1 and see what are some of the other common ones because I was on the 1040. Capital losses. So if you sell stocks and you lose money, so right now the stock market's down and everybody's been talking about it. Don't encourage you to pull your money out while it's down, but if you do,
it's a buying time if you know the market.
it is. It's everything's on sale right now, right? So it's like go ahead and get in, especially if you want to be in there for the long term. Again, not investment advice, but generally you can deduct up to $3,000 of your capital losses on your tax return. So say I buy Tesla and I lost like $5,000 on Tesla. I can only deduct $3,000 of that against my capital gains on my tax return. And then the other $2,000 are carried forward to the next year. So yeah, let's go to the Schedule 1 and just go through that to see what some of the common ones are. So sometimes they include additional income on your tax return, like if you got a tax refund the year before. If you get alimony, they include that. Your Schedule C goes on here, your rental income.
It's tax and alimony?
Yeah. So.
Uncle Sam,
And then on the reverse, if you pay alimony, you get to deduct it.
Come on,
Let's see.
fellas.
Shout out to the white man.
Yeah, they have other income on here. So cancellation of debt is another one. So like if you get student loans like charged off, that sometimes will go on your tax return.
Okay.
Jury duty pay is on here. Gambling income. So you're supposed to report your gambling income if you go to MGM.
Yeah.
You barely VA.
You hear that? All my friends who frequent some places that I won't pull up their name because I want them to get in
I
trouble.
think in Maryland it's over 10,000 is what you're supposed to report though. So you good as long as you don't get over 10,000.
Yeah, and see that's the whole thing. The IRS is generally, it's like the whole 1099 where you're supposed to report if you get paid over $600. So people be like, all right, pay me like $500, but you're really supposed to report everything. To generally speaking, and then other deductions you can have are.
It's news to me.
If you are self-employed and have your own retirement plans, you could deduct that on your tax return. Health savings accounts, you can deduct that on your tax return.
Yeah, they definitely ask you about how much you paid to your health insurance this year.
And then that was something they added back with Obamacare where they were penalizing people for not having health insurance.
Damn, I forgot. Health insurance is definitely one.
Yeah.
It's like one of the first 3 questions they ask when you file your taxes.
And it's like you can get a penalty if you don't have it. And then they had send out a whole form to prove that you had it all during the year, which I think that they were trying to do to eliminate a lot of the medical debt people had, because it was just like if you go to the hospital and you don't have insurance, it's going to be stupid, and then you have all this medical debt that you have to pay. So they were trying to mitigate that risk. No, but on your credit report. Yeah.
So, bringing up credit report, how does credit report and taxes, do they play into any part? Do they tie in? Can you, when talking about deductions, is there any way you could use credit debt? Any, finesse that on your taxes? Well, no. Yes.
No, you can't really finesse the credit.
Just asking the
but I was going to
questions.
say, I'm actually interested. I'm not sure off the top of my head with the people who owe the IRS and have payment plans. I'm not really sure if that affects the credit. I would assume so, but I'm actually not sure. I know they could take you to court for it and garnish your wages, etc. But I'm not sure if that shows up on your credit. Just
to court before they garnish your wages, or they send you a jump and be like, you can go to court this day.
honestly, I don't know the process. Listen, look at me being transparent today and saying I don't know some of the things that we're talking about, but
Real pride right there.
I'm curious about the nasty work portion of taxes.
oh, I can't talk about that on here.
Why not? Not
Not where you play a part.
No, not like finessing. Not like finessing, but the actual process of
what I've seen before.
Okay, sure.
You know what I'm saying? We didn't ask for all that.
I just want to know, for example, like when people do like lie on their taxes, for example, what is the likelihood of like getting caught when people maybe get like a higher refund than they're supposed to? What ways are they doing that? Like that's the kind of work I'm talking about.
If I worked for the IRS, I probably would know more what's flagged for audit. I've heard the earned income tax credit, but you have to make like a really low amount to get the earned. It's a threshold where you have to make a certain amount to get the earned income tax credit.
It's like under 12 or something.
Yeah, I was trying to be like politically correct. I don't know.
What do you mean? The IRS says these numbers. This is not you. You didn't decide what the earned income tax credit was. Like, I know you want to be. I don't want to be mean to people.
Yeah.
Like, that wasn't your. It's government.
It's 12 because DC has they had something about it and they was talking about it recently.
Oh, okay. I'm like,
The reason why he's probably very much so right. The IRS says poverty for a family of 4 is like $30K. So divide that by 4. You're getting around like 9 to 12K. So like, yeah, he's probably right.
okay.
So let's roll with that.
That's fair. So people who are claiming that, I think, more susceptible to audit. And then
Y'all nasty work, IRS. I want y'all to know that. Very nasty people.
Those are funny people, bro. Like, if that was the case, they'd be worried about niggas making 60, 50K.
yeah, the big corporations definitely probably going after that more. I was reading an article today, and they were saying that people think a home office deduction will make them more susceptible to an audit, but apparently that was debunked. Especially now because a lot more people are working from home, and so it's like for me as a business owner, I have a home office, and so I just have to measure out what square footage that is compared to my entire space, and I'm able to deduct utilities. If I buy a new desk for the office, I could deduct that on my taxes. What else? Like mortgage interest, etc. Things that are going into what I'm paying for my home. Essentially able to deduct that on my taxes as a home office expense, as long as it's solely used for my home office. So the way they're trying to get around it is like, hey, if you have a home office but it's actually your bedroom, then you're not able to use it. But that's assuming the IRS is going to go into your home and like actually like point and look at it. So
In the state of Maryland, what's the square footage for you to claim as an office?
there's no square footage. It's like it is what it is what it is. Like yeah, like whatever your home office is what it is. Yeah, it is.
They gonna tell someone what the you gotta be this
like
big. Yeah, like
they have like a 20,000 square foot home and their office is like the whole left wing. Yeah,
and that's what I'm just saying. I don't know how the government could tell someone that. It just doesn't make sense.
Because it's like, who knows? Because like you got retail space and then you got commercial space and office space, things like that. Square footage definitely plays a part in that. That's
For sure. I'm curious, paying taxes. So, like, how do they decide the number that you're going to like pay? And I'm not talking about the government. I'm talking about when you pay somebody to do taxes, or like you pay TurboTax. Like, how do they decide that number?
TurboTax, I think they.
Is it a flat number? I don't know.
Yeah, I think TurboTax typically lets you file for free, but then you pay for the software, right? So you can go in Costco and buy TurboTax for business owners or something like that. Oh. But the standard W-2 TurboTax,
yeah, if it's like a simple W-2 or whatever, you just put your information in, blah blah blah. They calculate it, give it back to you, whatever. You good to go, state and federal. But if you got like other deductions, which is like stocks and home and all that other shit, you definitely got to pay for that. So,
so it's like a service fee.
Yeah, for sure.
Gotcha. So
you want the experts to look at it. They charge a little bit.
I can't with
it's
the.
like that. No, they're like
3 tiers.
I'm curious. So do you happen to know what like the most expensive tier is, just off the top?
So I think the middle joint is $139 last year.
Okay.
That's what I remember. And I know it was, like he said, it's free. The experts for like $139, and it's like another level
above that.
Yeah, it was like
250, some shit like that.
Probably somewhere around the 250 area.
Yeah.
So I'm curious when people, and this is just for the, because I'm worried about the consumer. I'm not really worried about the other people because we are consumers. When they are paying to have someone do their taxes, what is it an egregious number, at least in your opinion? Once again, this is not financial advice. But what's an egregious number? Someone was like, yo, my grandmother said she's doing my taxes for $500. You're like, what the fuck? Like,
Yeah.
what's the number that you're just like, okay, that doesn't make no sense to me?
I actually don't know because
Some told me that's in the top 5, man.
when I was working for the firm, they would charge people crazy amounts for the taxes. So
Well, no crazy, but just a ball, like a range.
I can't even think at the top. I can't even think of. I remember seeing. I used to have to invoice people, right? But I don't remember what it was. But they would charge like a simple W-2 for a kid.
College
An
student.
amount, and I was just like, oh, that's a little high, but it is what it is because they're doing all their other stuff too. So it's just like you're doing my C corporation or S corporation tax or my 1065 for my partnership. You're going to do my individual on top of that, and then you're also going to do my kid, and they just throw that in on top of it.
They just like, we're doing all the taxes.
So that's when it really makes sense, right? Because they're like, we're not just having someone come in and say like, hey, can you do my tax return for my individuals? They're like, no, you got to have a business.
What else are you doing?
Yeah, so they're like, you got to do.
Oh, so it's a little different in that aspect because it's a lot more going on.
Yeah.
All right, well, do the turbo tax.
Like 5,000 is wild. Like I could definitely say like 5,000, but I just don't know. For like a simple tax situation, that's like you should be able to file on TurboTax for like if it's just W-2.
Well, I'm just saying, like, all right, let's say you maybe just had your first child, or you bought your first house, or you just got married. Something that requires a little bit more than just, hey, I'm just gonna check all these boxes on. That's what I'm saying. For that person who,
Yeah.
It's simple.
Yeah.
well, maybe someone who has a little bit more deductions along with.
Like somebody that gambles.
I can see how it can make someone feel uncomfortable doing that because I know like when you're able to like when you buy a house you can deduct points on your tax return and you're starting to do the mortgage interest and the property taxes, but if you're not aware of all this stuff, you're like, all right, I want to make sure it's done right. So I could see why you would go to somebody. I can put eyes on it and see if it's right on my end, but if you don't know, it could be helpful to just go to someone who actually knows what they're doing and explain all the things that are happening. Like, hey, here's your Schedule A. So remember you bought your house. You bought it in September, so you didn't pay that much mortgage interest or your property taxes. The prior owner paid for it, so this is why you're not doing the Schedule A this year. So next year, you'll have 12 years of mortgage interest and you'll pay all your property taxes. So then we'll take advantage of the Schedule A, stuff like that.
See, that's for
Interesting.
in your, once again, not financial advice, but in your opinion, where is it income? Is it sort of how complicated your taxes? Where does it fall where you maybe need to go get advice from somebody?
Definitely complications. Income is like if you have a W-2 and you made $3 million and that's all the stuff that you had going on, it's like they just plugged one number and then figured it out. So that's not complicated. But then I also assume if you're making $3 million that you probably have other things going on. Yeah.
Especially with a W-2.
So it's truly, in your opinion, just about the complication of the actual taxes.
And complications are subjective, but definitely business owners, that gets a little bit more complex. Like the vehicle deductions, like mileage, that's like who's keeping track of mileage and stuff like that, or you need someone to help you. Yeah. But even as a business owner, if you are driving for business purposes, you could deduct that mileage. So for me, if I'm driving to a client meeting, I could deduct that mileage
If
on
you
my
drove
vehicle.
here to come talk to us about
This is advertising and marketing. Yes, and this is advertising. This is business meals like this. And where's the Terramana? But okay, business meals. I mean, alcohol is really like that's kind of murky. So you could say this meals and entertainment, but alcohol could be considered meal. So like if
a business meeting.
exactly because are we talking about finances?
For promotion and marketing purposes.
Yeah. So.
it's actually, you said it I'd be bored, but this is actually kind of more interesting to me. how do you not get away, but at what point are you like, I can't do that? Because like we just talked, like you said, alcohol could be entertainment, could be food. Yeah, like when do you decide like, hey, that meal, for example, let's say we went to go get a meal after this and we continue to talk about what we had talked about here. When do we decide that it is just a friendly meal versus a business meal? Are these decisions that one has to make, or is it just subjective?
As long as you talk about business at the meal,
At any point.
So it's like, so I was with my clients and we went to Jasper's just as an example, and we talked about insurance, and now this is a business expense.
That's simple.
Yeah, if you own a business. So if you're W-2, you can't do that. So that's why people are like, get a business. Nasty work. Very nasty work.
The government been doing it forever.
So what I saw at my previous job was we were getting people's bank statements and credit card statements, and we had to cipher through that. And literally, like, they would just be going through to, actually, let me not say this is my previous job. I don't want to put people on blast or anything like that, but maybe I heard about a thing, right?
Yeah.
Where
Blue flame with their clients.
no, this is strictly white. So yeah, so whatever the white equivalent.
Gentleman's club.
But it's just like, yeah, you go. I mean, you're just doing your weekly lunch meetings, or I'm just going to run to Chipotle real quick. That's on there. But also, I'm going to Miami and going to the La Fontaine Bleu. Like, that's also on there too. So as long as you talk business,
It works.
you have to have the receipt. So here's the rule of thumb. Like, you want to make sure you have the receipt, and you want to write down like who you went to dinner with and what you all talked about. So if the IRS asks you for that, you can have it at your disposal.
I did that at one of my jobs. That was literally my job. To make sure receipts matched up with what they purchased.
Oh, okay. So you were like auditing, basically, like doing internal controls.
At an HVAC company.
Okay.
It was lit.
Okay.
Speaking about audits, how does one deal with an audit when it comes their way?
That's a loaded question.
That's why I'm asking the expert.
Oof.
One that audited.
I guess you're supposed to. Well, I didn't audit.
Oh.
So I was working for the companies, and then it was always a huge deal if the IRS picked you to get audited.
That's what I would think, right?
It's like, all right, they gonna tap you on the shoulder and like, hey, show us that your stuff is right. And it's like, oh shit, like I gotta get my shit together and make sure my shit is tight. No one wants to be audited. Like, that's terrible. Yeah, but have your stuff in order. Don't lie. So that's the whole thing. Like, don't lie on your tax return. So that's my whole thing. Like, don't lie on it, because then it could come back to bite you. Wanting to make sure that you're not being egregious with the stuff that you're writing on. Like, sometimes I saw business owners who would, if they have so many assets, like fixed assets is the, like assets you own, whether that be like real property or cars, or like if you own a restaurant, your property is going to be like the building, all the stuff in it, like chairs are going to be accounted for, tables, registered, etc. That all goes into your fixed assets. Now, so imagine you're a franchise owner, you're like, all right, well, I just bought this nice Porsche, I'm going to throw that in there. And it can happen because it's like, if you have like 1,000 assets in 1 year that are coming in, it's like, who's going to notice the Porsche? But but I don't know.
But if your assets cost a Porsche, I will notice a Porsche.
But here's the thing, like,
I'm a good auditor.
They could do like $1 million in assets a year. Like small businesses, you'll be surprised. Like, they're really not that small. They could do $1 billion. Yeah. Oh, I don't even know how many their fixed assets are probably. I know they have a team for that.
Ridiculous.
For their fixed assets.
Property, they own warehouses, they own trucks.
The trucks, like just think about trucks. Trucks be like 50,000. Well, regular trucks be 50,000. I don't know how much those Amazon Sprinters cost, but
the ones around here are still on gas. And San Francisco, New York, and certain other states, they have EVs. So those range between 60 and 85,000, depending on the technology within the truck.
So who's gonna notice a Porsche like or a Lambo? A Lambo might be wild, but
A Porsche, depending on the EV, Porsche costs more than a new Lambo.
yeah, and so those kind of things get deducted on
Interesting.
taxes for the business.
If you have an electrical vehicle,
There is a
think of
credit.
Virginia, California, where else?
Georgia, I think, had it where you get a tax credit
And
for
you
it.
also get a tax credit for that. So
Yeah.
you get an EV and
A Tesla, get the little nice little Tesla, and then you are able to just
Tesla's on back order and they are being recalled. So if you want to buy a Tesla from the great people of China that are using legal Muslim labor, by all means, do your thing.
wow, he just hit me. I did not know that was going on.
Yeah, a lot
Wow.
of companies are doing that, but that's another episode, man. Continue.
Okay, well, it's up to
But they
y'all.
are
Do you
getting tax
do
write-offs for that.
corporate taxes, or you just stay with the personal?
Yeah, no. So what I was just talking about was businesses.
Okay.
Yeah, so all those fixed assets, and then the business owner can throw their personal vehicle on there. That sounds really shady.
Right? I'm about to say that isn't okay, but hey,
I don't like this. It makes me feel exposed.
I mean, listen, taxes are a shady business. That's how they got my guy Wesley.
Oh, one of my favorite tax stories is
Tell me.
about the retirement accounts. And
Yes, talk about it.
so people, we know the pre-tax 401k, the Roth 401k has been introduced, but the Roth, traditional and Roth IRAs. So people are like, well, what's an IRA? If your job, so 401ks are, hey, I work here. We don't have pensions, but so that you think you're getting something, we're going to give you a 401k. And we're going to match you. And the matches be shitty most of the time. Like,
0.2%.
yeah, they're like, we're going to give you 0.2% if you put in like 1%. It's just like, so y'all not giving me shit. So basically, I see a lot of 401k stuff because of what I do and just ask people like, what are your benefits? And I think Microsoft probably has the best one because they're like, they match up to the maximums of that you put in, which is $20,500. But that's neither here or there nor there. What's my train of thought?
That works out on the
401k.
That works out for the employees too. So if they put into that, then they get like taxable
Yeah,
shit too, right?
yeah. So
Retirement accounts.
yeah, so the I'll use the TSP as an example. So the federal government's 401k is called the TSP. If you put in 5%, they put in 5%. So they match you dollar for dollar. So if you're not putting in 5%, then you're losing out on free money essentially, because you can take that money that you get. People are like, okay, well, I put that money into the TSP. I'm not going to stay here forever, but you can take that money with you when you leave and roll it into an IRA. So the IRA is something that you create on your own. So you could go to Fidelity or Charles Schwab or
Northwestern Mutual.
Northwestern Mutual and create an IRA, which is an individual retirement account.
Plug yourself.
Well, so here's the thing. So it's more expensive to do with Northwestern Mutual. So a lot of times I'll say like, hey, for general public, it's more inexpensive to do it with your regular brokerage account. So if someone wants to do it on their own, Charles Schwab, Fidelity, Vanguard. But if they want to do it with me, we can do Northwestern Mutual and do a Roth IRA with them.
Once again, not financial advice.
So, okay, so I'm trying to get my train of thought together. The Roth IRA is, you can only put $6,000 a year into that or a traditional. The rollover IRAs are normally like, I had a 401k, I left my job, I'm putting it in a rollover. So you can put an unlimited amount in because it's literally coming from somewhere else that you've been contributing. And if you have your bank account and you say, I want to put money in a Roth, they're like, all right, you can only put $6,000. And the reason why is because the IRS wants their money. And I'll use an example of Peter Thiel, who is a founder of PayPal. And he had a Roth IRA when it was founded. And he decided that he wanted to take some of his founder's shares and buy them, but he bought them in the Roth IRA.
Wow.
In the Roth IRA, if you put your money in the Roth IRA and it's after tax, because it's coming from your bank account, which has been taxed already out of your paycheck, when you get into retirement, you don't have to pay taxes on it. So he bought PayPal shares for pennies or cents or whatever it was, and it grew to like $1 billion or something crazy like that. Now he doesn't have to pay taxes on any of that. So the IRS is like shook, like this nigga conned us. So that's essentially why they only let you put $6,000 a year into those accounts, because they don't want you to get away with not paying taxes. Because if you had $6,000 and put it in Tesla and it blew up, now, like, or even Amazon, like Jeff Bezos, if you're like just buying Amazon stock and it blows up, the IRS is like, dang, we missed out on all these taxes. Whereas if it's pre-tax, like a 401k or a traditional IRA, you would put your money in there. And then when you're pulling it out, and we use that 4% as an example, like I have $1 million, I'm going to pull out 4% of that. What is that, like 96,000? Let me do the math. $1 million times
like
4%. Oh, my math. Wow, I must be tipsy. Well, I said 96.
There's a reason why.
96?
Hey, the flex
40,000.
is great on this podcast. I swear to God.
The 40,000 actually is like,
Hey, Charles.
and this is why you need more than $1 million, because 4% of $1 million is 40,000. If you divide that by 12, that's 3,000 a month. But at least, if you pay taxes on it, that's not 3,000 a month. But who's living off of 3,000 a month?
That's a good point.
If we're not living off of 3,000 a month right now in 2022, we probably won't be living off of 3,000 a month in 2060.
I mean, there's a lot of people that's not living on 3,000 a month right now in the United States.
Oh, sorry.
So this is where we're almost. This is a lot of good information. Damn, I feel as though every time you come here, you just
That's not taxes fault.
you just teach.
I know. I feel bad because
That's the United States fault. You know what I'm saying?
yeah, it's just like I feel like I don't want to.
Listen,
I never
it's
want to be in a
okay.
place of judgment.
You're not judging. You're just giving the numbers.
I'm giving.
You can.
I said 96. What the fuck was I talking about? But
I haven't heard you curse, but I like that. With that being
What
said,
the fuck was I talking about, though? I ain't never heard Dree talk like that.
that's what I'm saying. A little spicy.
I like that. That's all right.
oh,
That's not
Tax season
black
is-
home, baby, got that black queen shine.
really? Wow. Okay.
Tax season is upon us, and
That's how I be talking to myself in my head. That's crazy.
Man.
you've given a lot of good advice and helpful advice to the people today. But this is the point where you stare, you look directly at them, and then you tell them something about whatever you need to tell them. Last time it was life insurance. I think this time it seems like it's taxes.
Guys, I hate taxes.
You told us that on your first time here.
Yeah, and then I got here and I felt like I was like bamboozled. I was like, damn, we're talking about taxes today? It makes sense.
You told us that you wanted to come on here and talk about tax.
I said that?
Yeah.
Wow.
Yes.
You definitely
We
do.
didn't invite you on to talk about taxes. I much
And this
rather
was
talk
you
about
who wanted
Khloe
to talk about-
Kardashian hand.
That just solidifies how lit I was. Like, why would I volunteer to talk about taxes?
But you did a really good job.
Well,
Amazing.
I was really
Thank-
enthused.
I'm a
thank you.
1099 nigga and I learned some.
Schedule A, B, C, we all in there.
A, B, C, D. Okay. All right, so don't hold that against me.
I
So
won't.
I said that, and you said tax
All
season,
that's
Uh-huh.
but I know I have to talk about what my thing, but
Do it.
I don't do taxes anymore. So I'm Adrian or Dree. I don't do taxes anymore. A lot of my financial planning is tax strategy, right? So we make money and we don't want to pay it all to the government. So what can we do to mitigate those risks? And so that's where I come in and help people try to figure out more tax effective ways to save money, whether that be the Roth IRA or the Roth 401k or using life insurance. So those three things, I mean, there are other ways, but being a business owner is the way to have the most creativity when it comes to the taxes. And so that's why people are typically encouraging, like, oh, qualified business income deduction. I'm going on a rant. But anyway, if you need any advice on how you make a lot of money, you're trying to figure out tax strategies so you don't owe so much to the IRS, or want to learn about investing, insurance, cash flow planning, etc., or just don't know what to do with your finances, I'm your girl. So follow me on Instagram, Adrian Davis CPA. Or you can send me an email, adrian.davis@nn.com. Those are probably the best ways to reach me. Or we could do a 3-way text because I'm friendly. No, that's not a thing. Three-way text actually work. Like, yeah.
Who's the three-way text? Who's the three-way text?
Marcus did that. He did a three-way text for me, and I connected. So.
Oh, so that's what I'm saying. Are you asking us to do the three-way
Yeah,
text?
someone hit you up and they're like, "Hey, I want to work with her. Just
All right.
three-way text me."
If you want to work with Dree and you fuck with what you see, hit one of us and we will three-way text you with Dree.
Yes, that actually would be a good way. Yeah.
All right.
Because I know I heard feedback from last time, so yeah.
So we got
Heard
you
it loud and
clients
clear.
last time?
Huh?
We got you clients last time?
Yes.
That's alright.
Yes, I got
Hey,
clients. So
Goddamn, High Closer Podcast, y'all alright.
and I got amazing clients. Like I'm talking boss PG County women. So that's why.
Oh, wow.
Yeah. So
I ain't know all that. Shout out to that. That's all right. That's
yes.
I thought Obama. I didn't know she was actually talking about other people.
No, seriously. Yeah.
Hey,
I got real clients on this.
Yes.
that's all right.
Let's make some noise for that.
That's all right. I feel like I did a good deed.
No. Cause y'all blew me and y'all ain't watched us as much as y'all watched the other jokes. It's just like, come on, Slim. We always trying to get y'all shit right. We trying to help the people. Charles got the Kirkin on the timeline. And if Charles get the Kirkin on the timeline, that means y'all really did something wrong.
I just feel as though like that was really salient advice about life, and I feel as though like sometimes we be coming here and we be fooling. So like when we're not fooling, you guys should take advantage because like this is really good life advice that we can all use no matter where we're at, no matter who we are, we can all use it. So
Yeah, they don't teach it in school. So I love my job is so hard because finances are so important, but people don't want to talk about it. And my job is money makes people so uncomfortable. So imagine I'm having uncomfortable conversation with people all day, every day. And so that takes a toll, but I know that it's not about me. I know that, I think I've talked about this before, but a lot of people, the only financial advisor they know could be me, right? Like it's like a black woman who is similar to you and understands the things like I like nice things.
You didn't pull up with your hoops today.
I didn't. I thought about that when I was getting dressed, but I was like, I don't want to overdo it. I got my braids though, so very authentic. Damn, y'all, the clowns.
No, that just killed me.
Y'all are clowning me.
No, you said authentic.
I have said nothing. I have said nothing.
You didn't have.
Listen, finish what you were saying.
But I just love. I had a meeting today, and we just went through the 401k, and it was so valuable to me to be able to bring that knowledge to somewhere. It's like, I don't really understand what's going on here. And we went through it and she left having an understanding. And that's what makes it special to me, where I'm helping people. We don't see it on the day to day. It's like we might change someone's investments today. They're not really going to see that impact until 30 years down the line when they're ready for retirement. They're like, oh shit, like I moved my money out of the G fund and it was making nothing. And now I'm in the stock market and I made 100,000, $1 million. So that's what I like to do and why I do it. So that's my purpose.
Make some noise for Dree. Also, be a client. She's good work.
Definitely great work.
Yay. You guys are great.
We try.
Y'all are great interviewers. That's a talent. It's like you just gotta ask a question.
It's not that easy asking a question.
It's not. Wait, you said it's not that easy?
It's not that easy.
No, it's not. Like for you to come up with different questions during the thing.
Professionals.
Yeah.
God damn it.
Wow.